75% of home buyers do not shop their mortgage. And I find this crazy considering a home purchase is likely the most expensive purchase someone will ever make. I feel the issue is that most buyers don't know how to shop for mortgage. So I'm going to show you how to do it. What's most important to you? Quality, price, speed? In the service world, this is referred to as the unattainable triangle. It's where all products have 2 out of these 3. But how does this relate to mortgages? Well, quality would have a lot to do with your lender or loan officer's reputation, their specialty. Do they specialize in purchase business or do they specialize in refinance business? Because believe it or not, there are loan officers who don't specialize in both. So what's the difference? Well, if you're looking to buy a property, you likely want to work with a lender who has a skill set that's more versed for purchases, the timelines they have to meet, the requirements that an underwriter is looking for to approve a loan, versus a refinance where there's a lot less on the line for the borrower if for whatever reason that loan does not make it to the closing table. On a refinance, you already own the home. On a purchase, the home you're looking to buy is at risk and your deposit could be lost if that loan does not close. And how long has that loan officer actually been in the business? Did you know you can look this up? There's an NMLS lookup tool, National Mortgage Licensing System lookup tool. You as a consumer can look up how long the loan officer you're speaking with has actually been in the business. But why would this be important? You might say, well, I like talking to them. I feel like they're doing a good job, although maybe they've been in the business a year or 6 months. Well, let's relate it to the number of loans they might have closed. Someone who's been in the business longer is likely closed more loans, which means they've had more opportunities to see scenarios that someone newer to the business has not seen. And the more scenarios that someone's seen, the more likely is they've seen your scenario. And if something were to arise during the process, they already know the way to get out of that situation and make sure the loan closes. Where someone with less experience or is newer to the business likely doesn't have that same skill set necessary to deal with situations like that if they were to arise. So that's very important. How about the hours they're available? Are they available to you around their own hours or around your hours? Have you ever wanted to go to a store and the store is only open from 9 to 5, but you're not able to go between 9 and 5? Maybe you're not available till after 5 or you're not available until only before 9. Well, the store's not going to change their hours around you, but there are loan originators and mortgage companies that work around their clients' hours and not necessarily have set hours of their own. Maybe you need that to work around your schedule when you're looking to buy a property. Is a loan officer just a single loan officer or do they have a team? Well, what's the benefit to that? Well, we all only have 24 hours in a day and we know we're not working all 24 hours out of that day. So let's just say a great loan officer works 10 out of the 24 hours in a day. Well, that's only 10 hours that they're available to you each of those days, along with all of their other clients and along with doing everything else they need to do in the business. A team, on the other hand, if it's 2, will have double that amount of time. 3, triple that amount of time, so on and so forth. So the benefit of a team is there's going to be more availability to you. And the other benefit to a team is that there are going to be people on that team with all different amounts of time in the business. Meaning that, like I said, if a scenario arises that maybe the newer loan officer on the team isn't familiar with, well, the team member who has more experience can step in to assist. So it's extremely, extremely important to keep in mind. So that was quality. Now let's talk about price. So lowest price. In the mortgage world, we're going to relate price to rate or cost, right? But you often sacrifice the quality when trying to get the lowest rate or lowest cost. Doesn't mean you can't get a low rate or can't have low cost with good quality, but in most cases, for the lowest price and lowest cost, lowest rate, you're going to sacrifice the quality. You're typically going to be working with a less experienced person, most likely a call center in the mortgage industry, someone who's barely been in the business or might not even be licensed. There are companies out there where the person you're speaking with is really just an intake representative. They're not licensed, and you don't even get to talk to the licensed individual because all they're doing is churning people out. You're just a number to them. It's easy to quote an interest rate. If you just want the lowest rate and cost, you don't even need a person. Just go online and do it yourself, right? But you're going to be sacrificing quality when you do that. Now, maybe you have a cookie cutter situation where, you feel you don't need someone who's has a little better skill set, is a little more qualified to help you with the process. You can walk yourself through it. Okay, by all means, go ahead, get the lowest price, get the lowest rate, whatever you need to do there. But not everyone fits into that, and most people don't fit into that in today's day and age. You need someone who's going to hold your hand, walk you through the process, understand the guidelines, and make sure it happens. And like I said, that's not always going to be the least expensive person. Relate this to other industries. Do you always want to go to the least expensive person for something? Just keep that in mind when you're shopping for a lender and looking at mortgage options. Cheapest isn't always best. Now, what you could do to still get good quality and good service and a low price is maybe compare brokers versus retail lenders. So a broker is someone who deals with the loans on a wholesale basis. They have access to multiple lenders, and as the word wholesale would indicate, typically going to be less expensive. A broker represents multiple clients to one lender or investor, where you as an individual going to a retail bank or lender represent just one. Because the broker represents many, they're able to get a discount on that group of clients that they're bringing to the lender versus you going to the retail bank or lender on your own, only being worth one loan to them. And because of this, that broker or wholesale lender is able to offer lower rates at a lower cost to the consumer. Now, what you can do, no matter who you're speaking with, you want to do this anytime, is let that loan officer that you're shopping with, let them know you're shopping. Tell them, hey, just so you know, you're not the only loan officer I'm speaking with. I'm actually going to be speaking to other loan officers. I'm going to make my comparisons. You have a 45-day window to have your credit pulled by more than one lender in order to see what they can get you qualified for or what they can offer. So you might as well take advantage of that, but make sure to let your lender know you're doing that, because they might be more inclined to offer you better terms up front if you tell them that than later on if you come back to them and tell them you got another offer and now they're trying to match it, right? Or beat it. Let them know up front. Tell them you're looking for the best possible terms from the very get-go, and you should receive those. So when should you be getting these quotes, and what should you be asking when you do that? Well, you should be getting them at the time you're getting pre-approved, right? Get a general idea of what could be offered at that point in time. But keep in mind, a lender can't lock your interest rate, or in most cases won't lock your interest rate until you found a property. So the rate they're quoting you on day one might not be the same as what you're able to get when you go under contract 30 days later, right? Or longer. Who knows how long it's going to be. So just keep that in mind. It's like gas prices. I don't know what gas prices will be next week. I know what they are today, and they're different from gas station to gas station, right? Same concept with lenders. The rate will be a little different from lender to lender, and today's rate won't be next week's rate. So getting today's rate, if you haven't gone under contract yet, and comparing that from lender to lender is really not going to do you any help. What you want to do is, once you go under contract, go ahead and get quotes from multiple lenders, ask if they can give you an itemization or if they can put it on a loan estimate for you, which is an LE. And what you want to look at on that loan estimate is specifically page 1. You want to make sure it's the purchase price you're expecting, it's the loan amount you're expecting, and it's the type of mortgage you're expecting. And page 2, you really only want to focus on items that are from that lender specifically. You can be completely blinded by all the third-party costs, and it can be extremely confusing because those can be manipulated to make numbers appear lower than they actually are. At the end of the day, the third parties that are being used for a transaction are going to be identical regardless of who the lender is. So when you're looking at a loan estimate, you really want to look at box A, which are your lender-related charges, and box J, where any sort of lender credit would be listed. That's it. It's really that simple. And if you want to know more about how to review a loan estimate in detail, watch my video on how to review a loan estimate, where I walk you through each section of that document and explain what they are and why one section matters more than the other when shopping lenders. So we've talked about quality, we've talked about price, let's talk about speed. This is often the most overlooked but very important aspect you need to consider when shopping for loans and shopping for a mortgage lender. So let's talk about this speed. Well, first, we're going to talk about speed on the pre-approval process. So you're going to reach out to your lender, you're going to have a conversation with them, you're going to provide documents that are needed for that lender to complete your pre-approval, like pay stubs, W-2s, bank statements, right? Things to support your income, your assets, your employment, and your credit. Well, how long is it taking that lender to complete the pre-approval for you? This is going to be a good indicator of how long things will take later on in the process. right? How long did it actually take for the pre-approval to take place? If you provided your documents quickly, that pre-approval should be done within 24 hours of your providing the documents. If it's taking longer, well, that's going to tell you that this lender is either not doing this full time or they're not really concerned with moving you through the process quickly. How long does that lender take to actually respond to you? If you send them a text message, an email, or make a phone call that they don't pick up, are they responding right away? Is it taking days to get a response? I know personally, and I joke about this, I respond to emails before I receive them, right? People probably think I died if I don't respond to them within a couple of minutes of receiving a text or an email from them, if I'm tied up doing something else. But the point I'm making is if someone's slow to respond to you, well, that's probably not the right person for the job. How quickly are they actually going to close on a property once you go under contract? If they're moving slow through the beginning stages, they're not going to be moving any faster when it gets extremely important and you have timelines that have to be met per your purchase contract. You want to work with a lender who can move things through in a timely manner, is responsive to you in what you would feel is a timely manner, and will do the job properly. You're gonna get a good idea of how your loan officer works based on your interactions with them. So how quickly do they do things during the pre-approval process, as I said, is the best indicator for how they're gonna operate later on in the process. So I hope this information helps you focus on what's most important to you when it comes to your mortgage. Leave a comment below if you have questions about your specific scenario and I'll respond. Make sure to subscribe for more videos and mortgage advice like this.